Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. Now it's the first of the month as well as the first day of the week. So I thought I would share the pulse of the crypto market with you so you can keep your feet firmly on the ground, keep your focus on the market and on the objective on the longer term time frame, and also keep our emotions intact for what we can expect this week and this month by looking at the weekly and the monthly indicators. So in today's video, I'll go through some of the major indicators on the larger time frame to keep my Wisdom Bites community on track. Before I do that, obviously, I'll give you the disclaimer that everything in this video is only for educational purposes only, and I hope and I expect everyone to do their wider research before making your major decisions on investments. So with that out of the way, forget about the popcorn, forget about the cups of tea, just focus your attention on these major indicators. And we'll start off with the monthly indicator on the candle close that we've just had at midnight last night. I've been showing you this monthly candle now for quite a few weeks. And I said to you many times that we need to keep an eye on this candle and what type of candle it is at the close of play at the end of the month. Well, this January candle obviously closed last night, and as you can see, there's a body and a large wick at the top. So what does that mean? There's quite a lot of information that goes into the candle. So let me explain this to you. The long wick means, the long wick at the top tells you that there is a rejection of higher prices. So the price reached up to 42,000, but the bears have pushed the price well down to around about the $33,000 as it closed last night. Now, there are two types of candles we always need to look at when they're at the close. The first one is the one I'll show you from last year, well, from 2019, in June. And that was a sure sign that we were going to go down. And you may be aware of it. It's called the gravestone doji candle. And basically, this is where we topped out at the end of June 2019 when the price was 18,000. If you look at this candle here, you can see quite clearly it's got a very long wick with a little tiny body at the bottom at the opening price. That is called a gravestone doji candle, and that is a sure sign that the market is on its way down because there is a very huge pressure of a rejection of higher prices at that point. That's what the wick is telling us. If we come back to the monthly chart, we can see quite clearly that this is not a doji candle. The price open, from that point onwards, the body is far bigger than what would be classified as a gravestone doji. So that's not the case. So we're not really expecting here for the price to do what it did in June 2019 and have a big massive fall. However, there is another candle called the shooting star candle. And let me just show you exactly the definition of this. And basically, can a shooting star be bullish? Well, not really. But the shooting star definition is that for a candlestick to be considered, let me just highlight that. For a candlestick to be considered a shooting star, the formation must appear during a price advance. So obviously we've had the price advance in the last 3 months, so that's correct. Also, the distance between the highest price of the day, in this case the highest price of the month, which is 42,000, and the opening price must be more than twice as large as the shooting star's body. Now, if we have a look, the opening price was around 28,900, so let's call it 29,000, and the highest price was 42,000, so there was a 13,000 difference here, and the body has to be to the point where this 13,000 isn't more than twice as much. So the body obviously opened around the 29,000 and closed last night at 33, so that's 4,000. Now 13,000 is more than double the 4,000 candle prices. So therefore, this does qualify as a shooting star. Now, many people will dispute that. Some people would prefer this candle to be a little bit lower around here, around the 30,000 level. But from a technical point of view, this is a shooting star. Now, a shooting star is a bearish candle. And although it's not as bad as a gravestone doji candle where we can with a very, very high degree of probability expect the prices to tumble down. This is a bearish candle. So on a level of 50-50, I would expect the prices to go sideways and down rather than sideways and up. So we've got to keep our feet firmly on the ground. Yes, we would love the prices to go higher, but we have to go by what the charts are telling us, because we have to take the emotions out of the situation and not let our own narrative dictate what we expect the price to be. So this candle is telling me that we've got another few weeks and maybe a month or two before we start shooting towards the 50-60,000. Now, is that a guarantee? Is that a definite? Of course not, because even though we've got this, let's say if Elon Musk starts buying in a big way, well, it will negate this candle and people will just start buying in because of him, and the upward pressure would obviously take the price to 50-60 and upwards on that price. So anything can happen, but from a technical point of view, we can expect the price to go sideways and down for the next few weeks at least. If we looked at the RSI, well, as you can see, the RSI on the monthly chart is currently at 84. Now, certainly that is not the top of a bull market, because as you can see from the previous bull market, that was topping off at around about the 95, 96 level, and we got a double top at that point there. So we're well below that, so there's lots of room to grow. It may well be that we come back down towards the 60 level before we start moving up again. But if you look at where we could be in terms of the overall picture of things, at the 84 level, as you can see here, we were, I would say, around about this level here, there. So if you take the picture of the previous bull market around there, I would say we're around about this candle here. So we may have 1, 2, 3, 4, 5, 6 or 7 months, let's say, of the bull market to run yet, and that would take it to our target that we had made in the last few videos. I said that we could top off in around about August time, so that would actually fit in with that narrative. Obviously anything can happen, but it just gives us a little picture and an insight of to where we are and where we could go to, because we really need some guidance as to where we are in the overall picture of things with the crypto market. In the last many videos now, I've also been showing you the weekly RSI, especially when we reached up to the 90 level here, and I was trying to equate it with the previous tops of the 90 levels and what we can expect. And as you can see from the previous bull market, whenever we reach near the 90 level, we tend to always pull back right down to this 50, 52, 53 level. Each time it's done that, we come back down to that level. So currently we've just topped out at the 90 level and we're on our way down to that level. We haven't yet reached that. So maybe again, that narrative that in the next few weeks we may be going sideways and down may play out to this particular RSI level that we may actually in the next few weeks start making our way down before we have a bounce back up again. So again, that does fit into that narrative. We'll keep an eye on this and I'll keep presenting this to you in the next few weeks and what have you. If you want to support the channel, then please click on any of my videos, and then below the videos you'll find a box called Show More, which gives you a description box, and in that description box is the affiliate link with Etoro that I have. So I partner up with Etoro because that's the main exchange I use for all my investments. These are the reasons why I tend to use Etoro. It's a very simple exchange to use in terms of depositing money and withdrawing the money, as well as trading if that's what you want to do, as well as for long-term investing, which is what I tend to do. So if you want to support the channel, please click on the partnership link, and then what you'll do is you'll get this box here, and then you can basically put your username, email and password and just fill in the form there. If you like any of my videos and you find value in them, then please don't forget to like and subscribe to the channel. I also want to show you the angled volume profile. Now, to get that on the trading view, if you type into the indicators, angle profile, and you'll get this here, the angled volume profile. If you click on that, that's when you'll get this picture appearing. And this is on the daily chart actually. The reason why I wanted to mention this is because if you look through history with this angled volume profile, it tells you a wonderful view of when to actually buy and sell in the market, if that's what you want to do. I'm obviously a long-term investor, but I do look at this. So whenever I'm wanting to buy into any particular asset, if I see the angled volume profile and the price of it is lower than the actual angled volume profile, then that tells me I'm going to be getting it at a very reasonable price. As long as you know that the market is in a bull run and you find this at the bottom of the angled volume profile, this presents a wonderful opportunity. Now, yes, the market can go down, but would you want to risk that? If it doesn't go down and it starts moving up, then you'll have to buy at a higher price. So there's no point in messing around with the price as far as I can see. So for me, whenever I do have any cash to buy, if I see this, and normally that tells me that's a good sign to get into the market. You only have to look at the historical perspective. That would have been a great time to buy there because the price was below this angled volume profile, and look where it went there. Even here with these wicks, as soon as they went below, that would have been a great time to buy. And if you move further back, again here, the price went below the angled volume profile. That was a great time to buy. Same here. And if you go through history, we've only got the records up to here because it tends to just move forward and what have you. But as you can see, this is a great opportunity to get into the market before the next run up to the 50, 60 and 70,000 levels. The reason why I'm mentioning this is because many people still ask me, when is it best to get into the market because the market has gone up so much? Well, I don't think you're going to get prices below 20,000, that's for sure. And it may well be that we won't get any prices below 30,000. So we have to use these types of indicators to give us a certain amount of direction in terms of when to buy. And when you see this below the angled volume profile, that is a very good sign that you're going to be getting it in relative terms at a reasonable price to buy in before it moves up to the 50, 60,000 level. A quick look at the NVT. And obviously you can get that indicator by typing in the indicators box NVT, and then you'll get these lots of options here. I tend to use this one here, the NVT Original Network Value to Transactions by Glider Fund here. But you can use any of the other ones if you wanted to. That's just the one I've historically used for the last 2 or 3 years. And basically what it's telling us is that it's intact. It hasn't changed color at all. So I'm not expecting any major sell-off here. There's no sign that that's what's going to happen here. So again, that fits into the narrative that maybe we're just going to go sideways for a while. Many months ago, I actually showed you this MVRV score. Now, what this really shows us is that it tells us exactly where the bottoms and the tops of the markets are. So as you can see here, this blue line that's going through, weaving through, is the price, and we're currently around here, January 2021, or just past that now. But this red line is telling us exactly where we are in the cycle. So many months ago, I showed you this chart and that we were in the green here, and I said this is the buying opportunity that we always want. So if you go through here, these are the buying opportunities, and these are the tops of the markets. So if you look here, this is the December 2017 top of the market. So when the red line goes right through into the red zone, into the danger zone, that's when we want to be looking to get out of the market. Here, 2013, the previous bull market, that's when we need to get out of the market. And again here in August 2010, when the market had peaked as soon as it had actually started. So what it does is it shows us the peaks of the market, and where we are currently here, we're right in the middle here. So what that really tells us that we have a long way to go. We've only just started. Yes, we've gone quite a way away from the bottom of the market. We're not going to get $3,000, $4,000, $5,000 Bitcoins anymore. But what we have got is an opportunity that before it gets into the danger zone, and I'll be showing you this when we try to exit the market in a few months' time, whenever that cross occurs between the 111 and the 350 daily moving average, which we refer to as the pi cycle. So this is where we're at currently. We've got a long way to go there. So keep this, it's a good overview of where we are in the market. A quick look at the fear and greed index for Bitcoin. As you can see here now, last month it was extreme greed at 94. Last week it was at 74. Yesterday 78. And we're still in extreme greed here. The fear and greed index is a contrarian indicator. And yes, it can go to 80 and 90 and still move up, but the chances are, the probabilities are that we're going to go most likely sideways and perhaps even a little bit down and be in this sideways movement, which isn't a bad thing. When you look at the overall picture, it is more healthier for us to actually bide our time to allow the 111 and the 350 daily moving averages to actually keep apart before they cross. And the longer that happens, the higher the price of Bitcoin is going to go. So this is what I showed you in yesterday's video. The more we go sideways here, the more the 111 daily moving average will start to go sideways and keep further apart from the green line here. And the further we do that, then it's going to take more longer for this to cross over the 350 daily moving average, the green line here. And therefore we can start to achieve much greater prices up there. So keep an eye on that. So it is very healthy that we are going sideways and having a good correction here for the long term anyway, and for the price to go much further than what would currently happen if we just kept on going up, because these two lines would then cross. We would come to the end of the bull market. Finally, I just want to share this chart with you. This is the dollar chart, the DXY, and basically over the last few months, as you can tell, that the dollar has been weakening, and as you know, there's an inverse relationship between the dollar and Bitcoin. So whenever we see the dollar going down, the Bitcoin tends to go in the upward direction. As we can see from this chart, since October, when the Bitcoin started moving up, the dollar has been going down. But as you can see from here, in the last few weeks, since around the first week of January, the dollar has been moving up. And as we know, we've had a correction with Bitcoin. So this is something to keep an eye on. Whenever you see the dollar coming down, you'll see Bitcoin going up. And if the dollar starts going up, the Bitcoin will start going down. So just keep an eye on that. We're coming to a critical level here, as you can see. We're coming to a resistance level. So if the dollar does go above and break up, then we can expect the Bitcoin to be actually having a little bit of a correction further to what we've already had. So keep an eye on this as well, guys, okay? Okay, so we'll wrap it up there. That's all I wanted to share with you. I wanted to give you a larger time frame perspective of what's going on in the market. I know quite a lot of my subscribers do watch other videos, and I'm just a little bit worried that, you know, my subscribers could actually get sucked into the emotion of the hype and the emotions that the other YouTube channels are really pushing. I'm not sure why they do that, because surely the objective is to have all your subscribers make the most amount of money in this wonderful last phase of the bull cycle. So I'm not sure what their objectives are there. Certainly, I've got nothing to sell here. I'm just wanting to make a lot of money myself, and if I can help all my subscribers to make as much money as myself, or life-changing amounts anyway, then that would give me a huge amount of pleasure, and it would make the channel that we're running here all worthwhile. So surely the objective should be to make your subscribers as much money as you possibly can. So so that's the reason why I did this video, just to keep everyone level-headed, take the emotions out of the market, don't make any silly decisions. Please don't do that. Do your wider research. You shouldn't take anything in this video as financial advice. Simply because nobody really knows what's going to happen in the market. All we've got is those large time frame indicators to give us some guidance, give us some light into what's happening with the crypto market on a larger time frame perspective. So that's what I wanted to do. Okay, if you found value in this video, then please do remember to like and subscribe and to turn on the notification bell. And if you've got some comments to make and you want to share it with the Wisdom Bites community here, then please leave them in the comments below. Any comments, any questions, any suggestions you might have that you'd like to share with us all. We're all here to try and help us to get to the end objective, which is to make the most amount of money in the shortest time frame. What a dream that would be. So until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.